Greetings, comrades. Cash versus profit. It's an obscure part of our VCE course that students traditionally struggle on the end of year exams. My evidence, look at this question from 2020, a 4-marker. Students have been asked to explain how net profit can be higher than net cash from operating activities with an average of 1.1 out of 4, only 9% of the state hitting that 4. Then in 2021, similar question, cash versus profit. Again, check out the stats, an average of 1.7 out of 4. Students have done a bit better than the previous year. Fast forward to 2023, a comparison question between the operating activities section of the cash flow versus the income statement. Again, 1.8 out of 4 as an average. And then 2024, a net cash flow from operations versus profit with 2 examples, yielding an average of 1.6 out of 4 across the state. So here's my suggestion on how to approach cash versus profit questions using the 4D approach. So what are the 4 Ds? Well, you start with the definition of both net cash from operations or just net cash, depending on the structure of the question, and then you define what we mean by net profit. Then you clearly differentiate the two. So these first 2 steps are generic. Then we get into points 3 and 4. You give directional data that explains why one is higher than the other. But in your reading time, make sure you process which direction that is. Is net cash higher than net profit or vice versa? Because that will have a major impact on those 3rd and 4th points there. Examples of directional data. Now this first one's an interesting one because historically students get stuck on this. What they'll do is they'll go credit sales is a non-cash transaction, so therefore that explains why net profit is higher than net cash from operations. That may be so some of the time, but often not. For instance, if we had a big credit sale, and when I say big in terms of dollars, towards the end of the previous year, and based on the credit terms, we'll collect most or a lot of those funds in the current year, then it is quite plausible that our collections from accounts receivable will indeed be higher than our credit sales for that year. So we need to be very specific when we do that comparison, also looking at the data depending on what you have. In terms of if we are purchasing inventory on credit, you'll need to look at the cost of sales. So think about the timing here. We buy the inventory, we sell it. That inventory we basically value it at the cost price, and then later on we pay for it. So we need to compare the cost of sales to the payments from accounts receivable before we make a directional call on which one's higher, net profit or net cash. Look out for prepayments. So we've done a big prepayment of advertising or rent, and it's only been partially consumed. So therefore we've actually paid out. So our net cash from ops is lower than the actual expense reported in our income statement, which explains why net cash is lower than our net profit. Look out for accrued expenses. So we've had some wages at the end of the year or something, and so therefore our actual payments is lower than our expense because we haven't paid for all those wages, but based on accrual basis accounting, we're going to report all of the wages consumed. Look out for your non-cash expenses, depreciation, inventory loss and write-down. They will lower your profit and have no impact on the net cash, but we do need to specify that. Don't just assume that if you talk about depreciation, the assessor is going to factor in that it is a non-cash expense. You need to spell it out. So I'll walk you through how to approach this for the 2020 exam. Again, I picked this one because this one statistically was the worst, 1.1 out of 4 as a state average. So if we look down the bottom here, we've got some figures. The net cash from ops is 12.2, while the net profit was 14K. You've been asked to give 2 examples of why the net profit was higher than the net cash. Now, what's interesting about this question is look at the date. In August 2020, and all of this information relates to September. So we don't need to talk about any of this. So therefore we need to be speculative. But we do need to acknowledge this little nugget here sales. All sales are on cash basis. So therefore, that eliminates the ability to talk about credit sales versus collections from accounts receivable. They caught a lot of students out. That's something to look for in your reading time. So, step one, define both. Net profit is based on accrual concepts. We only include the revenue we've earned and we deduct the expenses incurred. Whereas the cash flow statement includes the cash in and out from our day-to-day activities, given we've got to reference this to the operating activities, and doesn't consider the accrual basis profit concept. Then we differentiate it. Again, we can be generic here. Net profit will be impacted by non-cash expenses such as depreciation or inventory loss or gain, whereas your net cash from operating activities includes some non-revenue and non-expense items such as your GST ins and outs. So there's your first two marks. We need a bit of detail in terms of differentiating and defining both. Now, in terms of your directional data, given there was some prepaid rent from that period, we can talk about that one. So therefore, in terms of how we structure this, we've had an outflow for our prepaid rent. That might be greater than our rent expense. So we've spent more on our rent than we've consumed. And so therefore that explains why our profit is higher than our net cash from ops. Secondly, what if our payments to accounts payable are greater than our cost of sales? Again, we're speculating here, and as long as we've got the detail and we're congruent with the question, we're good. And so therefore our net profit is higher than our net cash from ops. A couple of other possibilities. What if we made a GST settlement during the period? That would have no impact on profit. It's neither revenue nor an expense, but it certainly will reduce our net cash flow from ops. What if we sold a NCA and we made a profit on it? It's going to increase our profits, but the proceeds do not affect the net cash flow. We just basically report that via the disposal account. And maybe we had some accrued revenues such as interest. That would increase the profits, but we won't get that interest until the following period. So therefore that will not impact the net cash from ops.